Hi, my name is Herbert Byrd III from BI, and today's lesson is credit knowledge, credit profile, and credit score. The reason for the lesson today is to teach you basic credit terms and how a credit score and credit profile is made up. Very important. And the first thing we need to go over is, what is credit? Credit is the ability to make payments over time, on time. We need to stay responsible with our credit. So later in these workshops, we will show the importance of making payments on time, over time. Okay. Next thing is, we're going to go over credit scores. Credit scores range anywhere from 350 to 850. Most banks and lenders are looking for a credit score when giving out credit or money 680 and above, plus the credit profile. What is a credit profile? Banks and lenders look at your overall credit profile, not just your credit score. I will be going over later in this workshop how the credit score and credit profile is made up in percentages. Credit is used for everything in life. Having bad credit can be expensive. High interest rates, higher down payments, having to live in undesirable areas. And I know most parents would not like to put their kids in the local schools where they don't want to live. Example, if you are paying rent in an area where the rent is anywhere from $950 to $1,350, if you qualify for a mortgage in that same area, your payments would be anywhere from $650 to $950. And when you're trying to qualify for a mortgage, a car loan, a business loan, the banks and lenders are going to go by your FICO score. What is a FICO score? A FICO score is a 3-digit number calculated based off of the algorithm of how you make your payments on time, over time. A auto loan can be approved with a credit score as low as 500, with a typical interest rate of 29%, very high. With a 680 credit score, typical interest rates are 5 to 7%. With a credit score of 720 and up, the typical interest rate is 1.9 to 3.7%, with some as low as 0%. With a home loan in good credit, typically it's only a 3.5% down. With bad credit, from 20 to 25% down. On a student loans typically have 17% interest rate. If you have bad credit, it can and will go much higher. We are learning that credit is a tool. Also, did you know, when purchasing a car and driving it off the lot for the first time, it loses 20% of its value. Also, having bad credit will drive your insurance prices higher. A credit profile and score is broken up into 5 pieces. Banks and lenders are looking at your credit profile, not your credit score. The first is payment history, and it makes up 35% of your credit. That is the biggest part of your credit score. One late payment can take your credit score down 50 to 100 points. The higher your score, the more a late payment will drop your score. So I would put my payments on auto pay for at least the minimum, in case you're on a vacation or other things could happen in life and you don't have Wi-Fi and you cannot make that payment that day. Because remember, a late payment can drop your score anywhere from 50 to 100. So I would put my credit cards on auto pay. Next is credit usage. This makes up 30% of your credit. The next biggest part. What is credit usage? Credit usage is the credit that is loaned to you versus the percentage that you are using. What are the different types of credit? We have installment credit and we have revolving credit. First is installment credit. That's where you have a fixed payment. Example of installment credit would be a home loan, would be a car loan, would be a student loan. These are fixed payments to where you make the same payment as long as the loan lasts. Revolving credit is based off your balance. Examples of revolving credit would be a department store credit card, a regular credit card. Those are the types of revolving credit. Don't go over 30% of your credit utilization. An example, if you have a credit card that has a $100 limit, don't go over $30. And also, we should always have at least $10,000 available to us of credit in case of emergency, because things do happen. We don't know this because in school we weren't taught this. The next is credit length. This makes up 15% of your credit. The banks and lenders are looking for 5 years or more of credit length. Now, this does not mean that you will not get approved for the loan. Your credit profile could be stronger in other areas that get you approved for the loan. However, it may not be the amount you want, and interest rates could be much higher. Banks and lenders care less about age of credit when dealing with home loans and auto loans. With a credit score of 720 or more, you pretty much get the same interest rates as a person with an 800 credit score. The more you season your file, the longer the length of your credit history becomes, and that's how you get an 800 credit score. There's no secret to this. Make your payments on time and keep your utilization under 30%. Next is mixed credit. This means having a healthy balance of credit. This makes up 10% of your credit. Having a healthy balance would be having installment credit, a house loan, a car loan, a student loan. Also having revolving credit, a department card, a regular credit card. This shows the creditors that you can and are capable of making payments on different types of credit. The next is new credit, and this makes up 10% of your credit. When applying for a credit card, a home loan, an auto loan, the lender or the bank will pull your credit to see if you qualify for it. That's called a hard inquiry. Anytime you apply for credit with the purpose to extend credit, that is a hard inquiry. Banks and lenders want you to have no more than 2 hard inquiries on your credit report in the last 6 months when lending you money or credit. So that was the 5 pieces of credit. Let's go over one more time. Payment history, making those payments on time, 35%. Credit usage, don't go over 30%, remember? That's 30%. That makes up 65%. That is very big on your credit report, on your credit score, on your credit profile. It's very big. That makes up 65%. Length of credit. Remember, banks are looking for at least 5 years. That makes up 15%. Mixed credit. Department stores, auto loans, student loans, credit cards. Mixed credit, 10%. New credit, 10%. When applying for credit with the purpose to extend credit, that's 10%. So we've got all 100% of our credit. Now remember, credit cards are not bad. The knowledge, the education that we did not have before this, that was bad. So go out and get you some credit cards, but be responsible. We have come to the end of the lesson. My name is Herbert Byrd III, and we will see you at the next workshop.